Hi guys, welcome back to ValeTalks by Valetax. It's always nice to have you guys on the live show with us today. And how are we all doing? For those of you watching from different parts of the world and watching on different platforms, good day to you. I would have said good morning or good afternoon, but we're just scattered around the globe. Today with me, I have our one and only Manesh Patel. That I believe that we all already know who he is. And we have a new face on ValeTalks today, Albert Costa.
Valetax.
Nice to have you on the show today, Costa.
Thank you.
Costa is an analyst with us at Valetax, and he is from Indonesia. But today we're going to be talking about something very more recent, trendy, and interesting, which is how has the current geopolitical situations been affecting the market, and what are its effects on inflation thus far. So we're basically going to be talking about, geopolitical crisis, tensions, negotiations, progress, and bringing it all back to how it's affecting inflation and how it's influencing the markets presently. But before we head on to that, I'm just going to give Costa the stage to help us introduce himself. I realize I've been introducing people, not giving them the chance to introduce themselves. So I've taken a new turn in heart. So Costa, please go ahead and help us introduce yourself.
All right. Thank you, Rion. First of all,
Thank
it's a pleasure to be here. And I would like also to say it's great to be sharing this discussion with both of you and Manesh. I'm really excited because this is actually my first episode, yeah, on Valetax, and I think we couldn't have picked a more interesting topic to kick things off. And for those who don't know me, my name is Albertus Costa. You can call me Costa. I'm a market analyst and educator at Valetax Indonesia. And yeah, for the background, I've been involved, I think, in the forex and financial market for around 6 years, with, of course,
you.
experience like, in market analysis, trading, and so on. So I believe throughout my career, I've always been like more like in passionate and about helping people understand because I work take from time to time in local brokers up
Okay.
until here in Valtax with the foreign and international channels. Yeah. So yeah, today I'm looking forward to sharing some of my perspective and learning, of course, from both of you here, the seniors, and hopefully giving our audience a clearer understanding of, I think, how geopolitical developments are influencing inflations. Yeah, back
I
to you,
think
Rian.
Thank you so much, Costa. Thank you so much for joining us. And I believe our guests have heard you and they would keep your name in mind. But there's something we usually do, right? We usually
Mhm.
like to know what is your most traded pair or asset? What do you like to trade?
I like to trade, of course, like everyone's favorite, gold, the XAU,
Okay.
and of course I think the major pairs like Euro USD, so on. So uh, I also closely monitor, of course, the US dollar index, especially after what happened here in Indonesia, because we just like have inflations so much here for rupiah. So yeah,
Okay.
that's what I like to monitor on my laptop.
Oh, okay. I mean, the dollar index is supposed to be the base for
Hmm.
anyone trying to trade currencies. You need to really understand the dollar. I mean, the dollar houses everything, right? So
Hmm.
thank you so much, Costa. And just another thing, yeah. I noticed when you said seniors, you could see Manesh smile. Manesh isn't, Manesh likes to believe he's as young as us, so don't call him
I
senior, yeah?
am.
Ah, right. I know.
So
It's all.
today, that brings us to our topic for today. Now we know that we've had a lot of geopolitical tension in the
Hmm.
past 2, 3 years. Coming from the Iran war, we've also
Hmm.
seen some conflicts in Israel between Israel and Palestine over time, and then right now, currently, we see the struggle of Strait of Hormuz between the US and Israel, right?
Hmm.
And this has incredibly affected the markets
can add them into like isolation by one. That's it.
Very, very true. And there's something you said that I completely agree with. Yeah, when
Mm,
you made mention of how the markets are just basically going to be, are already priced in, right? So
mhm,
smart investors already know the direction, they want to be in because they've already factored in all of these things. But most importantly, is also when you said something about the Feds, right? And also trying to manage the inflation numbers. So CPI and PPI data is very important, but we still see them going with caution. But one thing that the
mm,
Fed still hold is they are higher for longer stance, right? They still believe that they would need to keep interest rate higher. So the whole idea of a possible rate cut that His Excellency Trump has been clamoring for from the start of the year is still most likely not going to happen, right? One of the major issues he had with Paul from last year to this year was interest rate cut. He wanted interest rates, to get cut, but we're still going to keep interest rate high with the level of inflation, right? That's ongoing. And so, like you said rightly, if we continue to see oil prices go up, then there's most likely, the chances of no interest rate cuts still probably next year. And maybe even as deep as the second quarter of next year, and we're just going to see interest rate higher. But I want to hear from Manesh, considering the more institutional side of how, markets could react and to this inflation concerns.
Well, let me give you my disclaimer first. Remember, I'm not a fundamental guy.
Yeah, yeah,
I'm
yeah.
pure
It is.
technical. Okay.
Yeah.
I know about fundamentals. I went down to fundamentals and I just not me. Can I share my screen real fast, Ryan?
Yeah, please. Please do.
Okay, can you? Okay. So I'll give you my different perspective completely.
Okay.
And so interest rates have been pretty much, can you see my chart?
It's coming up. It's coming up on my own end. Uh, has it on yours, Costa?
no, not yet.
Okay.
Ah, there we go.
Nah.
Uh,
Okay. So from my perspective, it's still different. Yeah, interest rates have pretty much been kept the same, but a lot of institutions here, they look at the US 10-year Treasury notes. And if you look at it here, we've gone up huge. No one's
right.
even talking about this at all. Typically, when this is up this rate, this high, the stock markets here are going down, and it's not happening at all.
It's not
So there's
happening.
a huge problem right now in the markets where interest rates here, day to day interest rates are going up higher. So even though the interest rates around the world are the same, this is going up higher. So the cost for people to borrow here is a lot more expensive. And institutions look at the 10-year a lot to judge everything.
Hmm.
And, so from that perspective, that's there. But then you also look at the crude oil, right? And at some point, people become passive. We've talked about this in past ValeTalks
Yeah.
sessions, right? Like COVID was a perfect example. We talked about COVID. Markets dropped drastically around the world, currencies changed and everything, in February and March. Then in April, the markets just took off. And why? People become passive to the news events. We're living in a world now where news events are coming to us in microseconds, whereas before it was days. So
Right.
we're bombarded with news over and over. If you look at what's happening in Iran war, in the US side, I don't know about worldwide. I can tell you this now in the US side, no one cares anymore at all. They're ignoring what's going on. One minute we have a peace treaty, one minute we don't, one minute we do, right? And the thing is, you're continuously seeing bombing and everything. So, what doesn't make sense is why is crude oil below 100 if we're still going for these situations, right? And if you talk to a fundamental guy on the crude oil side, it really doesn't make sense. Reason why is that when the straits were closed and they open up, let's say they resume all complete shipping. Well, there's a lag between, so what it goes through, it gets shipped, gets refined, and the whole 9 yards. So there's a 1 to 3 month lag on that oil actually being used. So it should be reflected in price. It's not. So everyone here is predicting what the next 6 months to 1 year is going to be, which is not really accurate at all. Crude oil, if things are still going on in Iran, it doesn't matter if we have the peace treaty or not, it still should not be below 100. So right now, this does nothing makes sense around the world at all. You got interest rates are kept maintained right now. They're talking about here, the news media is interest rates may increase. Fed may
Yeah,
increase now because of inflation and stuff like that. But, you know, I don't think anything's going to be done for a while, at least this year, because there's just too much turmoil going on and the correlations don't make sense at all. You
true.
got gold going down really high, getting ready. It's at a major support. If it breaks, it could go down another 1,000 points. Crude oil here was in the high 60s, right? Which doesn't make sense with Iran still going on. You still have the bombings, nothing's being concrete, nothing at all, right? People are listening to news and reacting, and that's what you're seeing. And that's why you have all this volatility there. The US
Yeah,
stock markets are inflated. We got our midterm elections coming up, and nothing makes sense right now. So you're seeing a lot of volatility around the world, low volume going on right now in every aspect from stocks, currencies, futures, everything. And even on the currency side, if you look at the average pip movement per week, it's drastically cut in half,
yeah,
right? So there's not much going on right now except a lot of volatility. And it's going to probably remain this way for a while, unfortunately. But we don't see an idea when it could end. So, this is where you being a trader really comes into play because you got to be patient and wait for those good quality trades to take. But, from a fundamental point of view, nothing makes sense to me at all right now. We could predict this and that, but I mean, I still can't from a fundamental point of view if I'm looking at it. And remember, I'm not an expert fundamental, right? You guys
yeah.
know more about fundamentals than me. But for me, looking at what's going on and looking at the charts, it doesn't make sense why we're below 100 at all, and at all. So that's my perspective. Nothing makes sense right now. And just, short-term trades are surviving more than long-term. That's the way I look at it.
So we can then say
Mhm.
that at this very point in time, yeah, we've come into some sort of accumulation cycle again, where
Mhm.
the market is ranging and it's just accumulating as much as it can at the very moment. But then
Ryan,
yeah, yeah, sure, please go
Mhm.
ahead.
no, I was just saying, show your screen. Sorry.
Okay. So with what Manesh said, right? How are traders supposed to distinguish right now, yeah, between the general technical market consensus of what they can see on the charts and the headline driven news? Because like you rightly said, a bulk of the movements happening in the market right now, yeah, are majorly volatility coming in from headlines. Because people are trading headlines, not fully understanding the context. And that's what we always do. Oh, CPI is higher than expected, so it means that the dollar is stronger, right? So it means it's good for the dollar, so they're buying, right? And all of those things. So they're trading headlines basically, but not context. So for traders who are trading headlines, right, or for traders who are fully trading fundamentals, how can they confidently blend in, right? The technical scope of what you just explained. Should they be more focused on, looking for day trades and trading shorter moves, probably targeting a 1:2, 10 to 20 pips, 30 pips, and they're out of the market? Or can they still trade their normal way of trading? Take, for example, I personally am a swing trader, right? And it's been difficult to actually get a good swing in current market conditions because markets are just stalling, right? So I'm not
Yeah.
getting my return to key levels as quick as they usually would get there. You could spend a whole month waiting for prices to just return to a 4 hour key level. And it's not going down, it's just ranging, right? So what would you advise traders to do in this period?
Well, so I'll tell you what I tell my students. I tell my students trade what you see. Okay.
Okay.
And let me give you an example. We talked about CPI coming out. Okay.
Right.
Statistics matter during this period more than emotions or anything. So,
Mm.
what I would encourage people to do, and this is something I encourage you to do this week with CPI, go to the
Yeah.
Valetax dashboard, look at the statistics for CPI, and look,
Mhm.
see what happens after CPI is released. The Valtex dashboard will tell you what happens 1 hour later, 1 day later, 3 days later, and so forth, right? So you could see if there's a bias to the bullish side or bearish side after the CPI data from the dashboard, okay? Let's say it's bullish for the dollar, okay?
Right.
Then what I would do is after it's released, right, I would look for a setup for on the statistical side, so say bullish. If I
Mm-hmm.
see, and I always start from the higher time frames lower because you always want a long-term trade. If you see a trade setup with your technical system on daily, then boom, you could go and that tells you it's long term. If you don't see it on daily, but you see it on 15 minutes, now the markets are telling you it's a short-term trade. So
Yeah.
trade what you see. So the statistics are telling you bullish, but if you don't get a bullish setup on the daily, there's nothing to take. It's not going to be long term. But if you see it
Mm.
on a 15 minute or a 30 minute, it's telling you short term. So
Mm.
take the trade bullish on the short term because your system says it's ready to go and take what you get, right? And this is the same thing I had yesterday with my students. If there's $5 on the table, all you could get is five. You can't get 10, right? Allow the markets to tell you what's going on. Statistics will tell you which way you have a higher probability. Now all you do is read what the markets tell you. If you have a setup on a 10 compared to a daily, it's telling you it's a short-term trade, right? If you have a setup on a 2 hour, 4 hour, it's a swing trade, 2 to 3 days at most, right? But allow the time frames in the setups to tell you if it's short term or long term based on the statistics. And that's what I would encourage people to do, right?
Mm.
Let the charts tell you how long it is, not what your opinion is or what your guess is. Let the money tell you.
Mm. That actually is, very, in fact, that is the smartest thing to do. But the problem here is a lot of people just like technical analysis, right? They just want to
Yeah,
come to see,
I did.
see what they just want to see support resistance. They want to see trend line, they want to see break of market structure. They want to see all of those things and just jump into the market. And I did put out a content, right? A real content recently for ValeTalks where I said something about that. I understand you love to trade technical analysis. I think my hook for that content was trading technical analysis alone is almost stupid in the current market conditions. Because we've seen very clear break and retests not even happening any longer. Like we've seen trend lines upholding. So you really need to understand what is the bigger picture looking at, right? Because you can't be trying to buy in a bearish market when every single conditions outside the market is telling you the market is bearish. Like just the
Yes,
same confusion you're talking about, the market is currently in a very, very, scattered state, and you really need to have a very strict regiment, right, to trade the market. So you need to look at the numbers, you need to look at the sentiment, most importantly you need to also look to say, okay, what's really happening, right, between US and Iran? Things like that before you want to take a trade. But, a lot of traders out there, they just want to click buy and sell. I mean, it works for some of them. I mean, the people who tell you, oh, they've still been making money, regardless of everything, but doesn't necessarily mean it's going to work for everybody, right? So that's why I
it's
asked that
gambling.
question.
Yeah,
It's
It's
just
something
gambling.
gambling.
like
It's
When
gambling.
I tell people that it's not because I haven't seen trades to take, but I haven't just seen good trades to take. There's a difference between seeing trades that are possible, right? That have the probabilities of playing out well, and there's a difference between seeing a trade that fits your trading regimen. Like you already see it and you know, okay, this is my trade. I haven't seen some of those trades in a while, like things, but you tend to want to adapt, and that's where I then come in and tell people that aside to just being a good analyst and getting your setups and everything, one of the major things that makes us traders is risk management. Your ability to be able to see a trade, know how to manage your risk while taking the trade. Because Take for instance, Manish, there are times where you don't get your A plus setup. It could be a C plus setup that still ends up playing out well, but it's your risk that that determines how that setup plays well, right? Because you still get to take a trade regardless. So that's like one advice I'm just going to give. So even if you're trying to trade technical analysis, right, make sure that you're managing your risks properly. I had a couple of bad months, and I spoke to Manesh recently, and
Mm,
he said to me, he said, your risk is everything to you as a trader. The moment you have your risk in place, you can survive and thrive in any market condition. For
Yep.
as long as your risk is in place, you can survive in any market condition. And that's just the truth about it. We as traders sometimes we tend to forget these common things because we get ahead of ourselves. A couple of good months and you think you're invincible. And it's not just for, new traders or intermediate traders, even professional traders suffer it. Because if
mm,
they did it, we wouldn't have hedge funds losing billions in certain quarters, right? It happens. It's a natural phenomenon in the market, right? So you want to pay attention to that. But
mm,
Costa,
mm,
there's something that interests me about this topic that I want to ask you, right?
mhm,
When we think about all of these things with how the market currently is, right? We see a lot of consolidation and everything going on in the market, like we
mhm,
already have agreed on, right?
mhm,
What do you think is going to be the reaction of the market if, I mean, at this point in time, it has to be if, because we don't know
mhm.
when, right?
Yeah.
If
Yeah.
this tension, dies down, like we finally see the Strait of Hormuz opens back up, and other pathways, finally gets open. The US
Mm,
relaxes its current ban on Iran on certain things and all of these things, and everything goes back to normal. Which, of course, we know it's going to take time because anything that
mm,
gets into a war level, it usually takes time to die out, right? What do you think the market is going to look like after then? The do you think there's going to be a possibility, right, for
mhm,
how the market reacted after COVID? Right after COVID,
mhm,
markets just went, we're going back to normal. It was almost immediate. I think towards the mid of 2021, when the COVID tension started to die out, we saw the market started to reversal almost immediately. Do you
mhm,
think the same case would happen for oil, gold, and other commodities?
mhm. All right. So, yeah, that's an interesting question. So, I believe, because I'm really like about the technical and the fundamental stuff. I think the geopolitical tensions gradually ease,
Mm,
I think the market will start, yeah, in my opinion, shifting its focus back to fundamentals. But again, I have also my, I think, personal approach, preference about the
mhm.
His Excellency Donald Trump. It's always unexpected with him, you know.
Yeah,
So right now, I think I don't. Sorry, I don't think it's exactly the same. Like after COVID, markets were recovering from like those unprecedented global shock. Yeah.
yeah,
Supply chains, you said, were reopening, demand was again returning, and I think today's situation is different. The economy right now is relatively more stable, but
right.
markets are dealing with recurring geopolitical risks rather than one-time global event. I mean, compared to COVID, even if the current tensions like ease, investor, in my opinion, will probably remain cautious because
Okay.
this uncertainty can return very quickly with what
Yeah.
he said or what happened. So I do think markets like could gradually normalize if tensions continue to decline. So there's a trend for declining the tensions, but
Right.
normal today, the normal we could say may look different from what we experienced before.
Yep.
Investors are, I think, likely to pay much closer attention to energy security, the global trade, and perhaps the inflation risk and so on. So, in other words, the market may become less volatile, I think, but I don't expect geopolitical risk to completely disappear from investors' decision-making process, because that's,
Mm,
I think, what's what it makes very interesting. I mean, Manu said about the things that doesn't make sense. Yeah, things that doesn't make sense in just only from the technical and fundamental, from the technical point of view. So I believe it's now another factor that traders have to incorporate. I believe alongside the economic data and the central bank policy. So that's
Mm.
what I think. Yeah.
Okay. Yeah, I also do, just to add to something you said, yeah, I believe that the markets wouldn't react exactly as they did after COVID.
Mm-hmm.
But like you said, his excellency, we have to give it up to him because he speaks and market moves, right?
Mm-hmm.
I we're going to, I think after all of this, right, I feel like the market is going to have to recover. Recover in the sense that we're probably going to get back to seeing the normal style of market volatility and
Mm-hmm.
liquidity back into the market. Because I don't know if it's just me, but the Asian session almost has more volatility and liquidity than the London session recently. You would rather trade the Asian session than trade the London session. I don't know if anyone has
Mm-hmm.
experienced it, Manesh. Have you noticed that the Asian session is more volatile than the London session recently? So I think
It
like
is. It is.
yeah,
There's a lot of shifting that's going on between the sessions going on right now, right? And also like the U.S. session, when Europe goes offline, the U.S. session typically moves,
yeah,
right? So we don't do anything early in the morning, or it's chop chop, and then as soon as Europe goes offline, our lunchtime, and it's only U.S. people trading, it starts to move.
yeah,
So there's
yeah.
a lot of things shifting and everything that's going on.
Market.
But
Yeah,
one comment I want to make for both of you guys, and I want you to think about this.
yeah,
You guys have said that after COVID, things have recovered, right? Well,
right.
didn't we recover?
Uh,
February, March, COVID went down. In April, the markets took off and went up 30% in the US stock market after COVID, right?
Yeah.
Okay, Iran war happened February, March. In April, we took off and went up 30% and we're still at the high. So take out the picture and look
Mm,
at the charts. COVID charts and Iran charts look exactly the same.
mm,
In April, for April, we went up just like we did in COVID and just like in Iran war. We've gone up over 30% from the bottom. So if you look at it, we were recovered from the Iran war just from a tweet from Trump that, hey, the peace deal. But if you look at the chart market and take out what's going on now, we've recovered from the US stock market. If you look at it from that perspective in COVID and Iran war,
mm,
we're already recovered.
mm.
So just a different perspective for you guys, right? We've
yeah.
in both scenarios, we've gone up in April 30%. So have we not recovered? Something to think about.
Mhm.
That
Right.
actually is
So
think about.
that's I believe that's yeah, it's of course it's based on data. Yeah, I agree that and if you compare the initial price action during those major crises, there are definitely similarities as I look from the data itself. Markets often react with fear first and ask question later.
Yep.
But however, yeah, this is maybe another something to talk about. Yeah, the perspective. If you look at the broader picture, the U.S. equity market has largely recovered from the COVID shock, but
Yep.
the major indices have moved well beyond their pandemic lows. Yeah. So although
Yep.
the part has been different like across sectors, the technology has generally led the recovery. Well, I believe some sectors in the stocks have taken longer to catch it up. So,
Mm,
in my opinion, I think the key difference here is what drives the recovery itself. Like during COVID, markets were supported by massive fiscal stimulus and very like accommodative monetary policy.
mhm,
That's what happened. I believe also in my own country. So today we are in much different environment. I think with the with a probability, higher interest rates, and more persistent geopolitical risk. But that's what I think. That's my perspective here. So I think maybe while the charts may show similar reactions during the initial phase of this uncertainty,
Yeah.
I wouldn't necessarily expect the recovery to follow the same pattern. But every crisis
Yeah, I
has
mean,
its
it's
own
different.
catalyst. Yeah.
No,
So,
the environment is different completely. Interest
mm,
rates, everything, right? But that's why
Yeah.
I said, from a stock price perspective, it looks like we recovered. From a fundamental perspective, it doesn't look like it,
it doesn't
right?
look
If you
like.
start looking at the inflation,
Okay.
everything. So it's two different perspectives. During COVID, we recovered from the price perspective and a fundamental because of, as you said, QE. But from the Iran war, from the chart perspective, price, we've recovered. But from a fundamental point of view, we haven't. So there's a difference there. But I agree. But from the chart perspective, it looks like we recovered, right? So people that are me, that are pure technical, are like, oh, we already recovered. But
Mm.
if you have a fundamental aspect, you're saying no. So there's a different perspective now than ever, right? This is
True.
where fundamentals and
Mhm,
technicals have
mhm,
gone deviating completely apart from each other.
Mm. And I
mm,
think I think another thing, yeah, that we also
mhm,
need to pay attention to when we talk about this, when we talk about the fundamentals and the technicals, yeah, like you're talking about the US stocks and equities, right? Recovering and going higher. But we also
mhm.
need to look at what is actually pushing currently the market when we look at equity, when we look at the US stock and equities, right? It's highly AI, highly AI. Cheap stocks are really one of the things backing the push on the AI stocks. And that's why when we look at it and we see, I feel like it's one of the reasons why what's his name? Michael, is it Blurry, right? The guy who
Yep.
predicted the,
Ah,
you know, and he's saying the top is here, like the bubble is about to go off, right?
mm,
It's very clear and evident to see because just the same way Manesh is saying, it's confusing because there's no reason as to why the market should be that price high. There's nothing
But
backing
Brian,
it. Yeah.
I agree.
You go
But
ahead.
we
mm,
talk about AI, right? But
mhm,
Right.
explain this. And this is something. Europe is all the all-time high.
Yeah.
Africa countries are all-time high.
Yeah.
Japan's at an all-time high. New Zealand just broke out and made an all-time high last week, right? China isn't. But if you look at all the countries around the world, they're at all-time highs almost. So it's not just the AI bubble in the US. I thought the same thing, but if you look at all the countries around the world, why are they at all-time highs? It just, I mean, look at Japan, way, way up. New Zealand just reached the all-time high for the first
Nigeria
time.
all time.
Yeah.
Nigeria just became the top performing
So
stock
mm,
exchange.
how is AI affecting Nigeria? Right? So
That's
there's something else going on, right? It's not, I understand a lot of people talking about AI, and the US is inflated. Yeah, our markets may be inflated with that, but why are all these countries at all-time high? It just doesn't make sense to me. You guys probably could make more sense of it, but from a perspective, I can't understand this because I'm just trading what I see, but I just don't understand how all these countries are all-time high. The only
mm,
this,
countries that are weak are is China and then India.
hmm. This feels like something I want to go
mhm,
into today. Because I'm really going to try to understand why. And that's a very good question. That's a
mhm,
very good question. But we're about running out of time and let's not keep the session too long. I want to say a very big thank you to Costa and Patel. I mean, as always, we would always give our closing remarks, to our traders and each and every one of you out there. Remember to trade smart and trade safely. And if you're not trading with Valetax yet, please do make sure that you click the link in our bio. Don't forget to hit that like button, the follow button, and hit the link in our bio to get your account registered and start trading with Valetax today with as low as just $1 for a standard account and $50 for an ECN account. The most and the best you're going to get in the industry currently. And for our trade outlook for today, we're looking at the DXY. We expect to see the continuation of the current bearish correction on the DXY before, the DXY continues bullish on the overall long-term view. On our daily view, we see that the DXY has broken above our key level at the 100 point for the DXY. We expect to see a correction of that level back into imbalances before continuation. So we're going to be waiting to see how the dollar reacts to the current inflation data to be released on Tuesday and Wednesday, which is the core CPI, CPI numbers, and the producer price index on Wednesday as well. And we also have Fed Watch speaking on Tuesday as well. So let's not forget that he's going to be testifying to the House. And that would be the major news to be paying attention to for the dollar. But on our advice, on our expert advice, we're going to be hoping to see a continuation of the bearish correction for the DXY back into the 100 levels before a continuation of the overall bullishness for the DXY. So don't forget to trade smart and trade safe with Valetax. And thank you so much, Manesh, for giving me an assignment, because that's an assignment you just gave me. I'm not going to be able to sleep properly. And thank you also, Costa, for being able to create time to join us today. And thank you to the people behind being able to make sure that ValeTalks comes live to you. Shout out to Faris and his team behind the scene. Thank you guys so much for joining ValeTalks today. And it's almost New York session. Always remember, risk come first and be a smart trader. We'll see you guys next week on Monday. And I'm Ryan from Valetax. Cheers, guys.
Cheers.
Bye-bye. Thanks. Welcome, Costa.